Hey guys, Wesley here. I wanted to record a trade recap of the short I took earlier today during the London lull whilst Jordan was hosting the Zoom call. It was a trade that ended up running to my 20.5 RTP. I took a 50% partial at 10R, and I'm going to explain to you guys why I took the trade and what basically happened in the moment. I'm quickly going to start top down. I'm not going to spend too long on this as Jordan has explained multiple times how the higher time frame is during Zoom calls, forecasts, outlooks, etc., etc. We are bearish. We have been bearish for a very long time, and in the current situation, we could see we had this large bearish higher time frame structure. We took out this low. It was an FTC on the H4 and the daily, but we could clearly see that we had printed this bearish swing showing potential alignment to basically uh, continue this entire bearish trend. Especially now, observing the H1 here, we could clearly see that this overall break of these lows and this most current low gave a very clean bearish swing structure. Hence, I have the protected level here. Now, also the overall protected level for me is this one, but we understand that this being the last notable swing in the market, continuations from premium zones here, with the market basically being fully aligned, were very high probable. Now, I personally had this as my most high probable supply zone here. This was going on the M15 here. Basically, the M15 extreme. These levels here didn't stack too much confluence, and you can see, especially today, coming into the sessions, they were already basically taken. Now, there were buy to sell wicks here. I didn't really care about them. They didn't really flip anything. They weren't properly developed, so I was not looking to aggressively short from here. If price had come up here, I would have been way more aggressive, but it didn't. So then basically what I saw happening during London lull was a structural shift on M15. Here we could see clear bullish breaks, but also noting that the nature of price was very corrective, and to me it showed a high likelihood of being the buildup of liquidity to fuel the continuation lower. Once we saw the M15 structure here shift, essentially we had full bearish alignment. The daily, the 4 hour, the H1, the M15, all of the time frames were bearish. So the only direction for me to trade after this break were shorts. Now there was a potential cause and reason that one of these demand levels, I don't have them on anymore, but it's in here and this last zone, some of them could have given reactions and pullbacks. And of course, we never know exactly what the market is going to do, but based on structure and our narrative, we can build our expectations and act and see them play out. And especially now, seeing full structural alignment to the downside, we found ourselves in a very high probable situation that we don't find ourselves often, but when they do, they can give amazing trades. Now, once I saw this bearish break on M15, I was looking where my supply zones were. The first zone that is clearly identifiable is this supply zone here, being the extreme. And I myself also had one refined zone within, and that was this zone here. This zone to me didn't stack a lot of confluence. It had reason to go from there, but if we look at, well, yeah, it's one of those zones that, seeing the reaction to essentially this entire demand range, so both of them were valid to hit more aggressively. I believe I only had the top one. Now looking at it, this bottom one also makes some sense. Excuse me. Oh, so yeah, this being the supply refined zone that I would have absolutely hit directly on the seconds if, or directly on the 1 minute without a 1 minute shock or IBOS. But that zone didn't, price did mitigate it, so there was nothing to do there. There was also a second zone that I was very interested in, and that was this zone. Now, stacking the confluences to this zone, the only thing that really was against the zone were two things. We had the premium discount, and we can see only this upper part of the POI was just around the EQ, but overall it was not amazingly priced. Secondly, if we look at this whole push down, there was no real inducement in the leg here. So both of those things were something I was aware about and understood why these confluences, or the lack of these confluences, could result in me taking a loss here. Now, as you guys might have seen in the community during the Zoom calls, Jordan has been looking into disrupted ranges, which basically are ranges that sweep liquidity to tie to something we already know. Basically, we saw price take a low here, take a high, and then take a low. Sweeping this liquidity here, it was a reaction to this demand zone, which led to the break of structure. In the way I look at this is basically we could see there was a big absorption of orders here that led to an expensive push to the downside that led to the break of structure. Now, by no means did this have to hold. Like, we knew there was every reason price had come to more premium levels, and if it were to happen, I would have absolutely tried to get in short again. This is my most refined zone, and the reason I was also happy to do that is because we can essentially see that this was the last bearish push. So I was sketching a pro trend, pro order flow continuation here. And as I saw the structural alignment and the whole narrative supporting my shorts, like all the liquidity on the left here, everything was taken. Like, there was no reason for price. It could have by all means, but it didn't have to go all the way up there. We could see all this liquidity on the downside being generated. So there was a high likelihood of price moving down here. Now, when price moved up, I was really happy by looking how price developed. We could see price was moving up rather slowly. It came down rather aggressively. We came into the POI, we had a bearish candle close, and I executed. For me, there was no need to wait for this 1M shift. By all means, you could have, and that would have resulted in a missed trade, which wasn't a bad thing if that's your plan. I knew, being fully aligned to the downside, I want to be in this trade, and if I take a hit here, fair enough, I'll try it again up here. But the execution came, price was hovering around a bit, so I thought when I saw these candles being printed here that there was a fair likelihood of me getting taken out. But luckily I didn't, and price started pushing down and basically hit my structural TP here, being this overall low. And took quite some time, for just over 4 hours. I took a partial here at 10R. Normally, I always say I take a full TP at 10R. But the only nuance to that is when I see a trade with full structural alignment, and they don't happen often. They happen only like once a month, or sometimes even less than once a month, maybe once every 6 to 8 weeks. And understanding the potential of this trade, I wanted to allow the trade to reach its potential, and it did. This might sound a bit inconsistent, but when we have full alignment, I feel like I should reap the rewards if the market is in that prime state. Now, I also wanted to show you guys a potential continuation. I didn't take it, but there was one valid continuation in my opinion, and that was basically once we saw price took this low, price took this high, then took this low, essentially created another disrupted range, giving this overall protected high, targeted low. We could see there were, in my opinion, two valid 1 minute candles to potentially execute from. This candle here was essentially the flip zone to this wick here, and it swept some liquidity here, and it gave this push down. We could see that there was a buildup of liquidity here, and we also had this zone here. Now, especially considering the momentum, the bearish time frames, bearish order flow, everything, catching a aggressive continuation is valid, and we can expect the ranges to hold to take the swing, which ended up happening. We can see price perfectly tap this 1 minute here, and you could have either executed on the candle close here, or if you wanted to wait for the 1 minute here, what you could see is the break and then another break, and then price broke up again. So I don't think it would be very wise to execute another trade here. So basically, the best way to get in was on this candle close here. But again, not a trade for me. Price had already moved quite a bit. And as I was already in a position that was by this point running pretty deeply, I was more than happy to leave it running. Now, also stacking compliments to this trade, we could see this point here was a oversold point in the TDI, so that was also a nice extra confluence to it. So yeah, that basically was a potential continuation, and we could see price after that melted and perfectly fulfilled its structural expectation and took this low. And then I basically closed the entire trade for a total of 20.6 R, something like that. And I wasn't bothered with price after that. So yeah, that was essentially my trade and what I was seeing in the moment. I hope this was helpful. May there be any questions, please let me know, as I'm always happy to answer them in the Discord or anything. And yeah, see you guys tomorrow.